Good afternoon, everyone. This is Gambell with simpleroptions.com, and in tonight's free video I wanted to follow up on some analysis I had given you in Win and also show you a couple of ways to use a trend line with this type of work. Now, full disclaimer, this type of work is geared strictly towards Thinkorswim, and that's where this indicator, the trend line, has the multiple features that I've been covering in that text part of the update. If you don't have Thinkorswim, the concept will still prove helpful. So the first thing that I wanted to show you is the most basic way of using a trend line. So when I was looking at this, and this just comes from sitting back and working on these charts, one of the things that I wanted to look at was the relationship of the trend. If we start back here at the beginning of last year, so let's come back and grab our trend line tool. And we're going to come back here. This was this move you saw here, right here. So that's February of 2015, and that's where I'm going to begin analyzing this trend. And I always like to find my 2 points, obviously my beginning and then my anchor, and then extend that out to the right to have my third point. I only really even like to use trend lines in situations like this when they at least touch 3 points, but that's the least favorite part of my setup in this type of work. It's just at least worth pointing out, and it's a basic way of using that trend line. The next thing I wanted to show you is that if you come in with a little bit more detail and you're looking at this price action off the daily chart, you may start to recognize that this swing low to high in relationship to this swing low to swing high have a lot of similarities, or just as you glance at them, they look quite similar. Well, if you take that same trend line tool, and let's begin by anchoring it to that first low, and then when you draw it up to analyze this high, if you'll wait before clicking the second time, you'll notice that you'll have this pop-out box that tells us that this rally has been an 11 trading day rally. It was to the tune of 21 points exactly, and it gives you the degree, which I'm not quite as much worried about. The main things I want to point out are 11 bars, 11 trading days, and the $21 point move. Now, I'm not going to place that trend line, we'll just right click and remove it, but then if you do the exact same thing here, swing low to swing high, okay, that was 11 bars and $20.64. So you start to see the similarities of it, and by doing it through the trend line, you'll start to find the exact values that you're looking for. So that's another helpful way of using that tool. Now, once you've seen that and once you've kind of got a feel for it, then the Fibonacci extensions are a little bit more built for discovering actual symmetry inside this. Not to mention they're a little bit easier to leave on your charts and just continue to have these levels to reference. So that's where I see symmetry in price. We also have symmetry in time that is defined by what we just showed through the trend lines. So when you have the two of these that mesh together, this is just recognizing time and price resistance. And when that comes into a confluence with that descending trend line, I think this is the part to consider it for a counter trend trade, or at the very least, a spot to come in here and pause. Now, the way that I've set this up is through a 102 unbalanced butterfly, and the closing price that I have on it today is pretty much exactly what I wanted to see, because I'm right there at my short call. Obviously, I've got some nice theta, and if you wanted to put that exact trade on right now, I would think that it'll be very close to this vicinity of pricing tomorrow. If you get a gap up, provided it's fairly mild, I still like that idea, and there's two ways you can look at it. You can either structure it as I have, where I'm looking for a little bit more of a bearish move and for it to recede off of that 102 area while still staying above 99, or you can play it a little bit more conservatively or with a higher probability by utilizing the short 103 call. The exact same strategy, if we look at doing that $3 wide, and more often than not, the wider the better. That still brings in a nice 32-cent credit. I like the risk reward with that type of trade, provided you are also of the same mindset that Win has run its course and at the very least is due for a pause. So I hope that helps, gives you a couple different ways to use these various indicators, and we'll see you guys at the next free update.